All right, so today we're here to talk about credit unions and why you should have your money in a credit union versus a bank. Does anybody remember hearing stories about their grandparents keeping their money in the coffee can or under the mattress, in that empty Lucky Charms box in the pantry, or the coffee can in your freezer? All those great hiding spots that we think a thief's not going to look at, right? So there's many good banking options today, thank goodness for us as consumers. But credit unions offer a much wider variety for us, a much more economical choice for us. So in general, credit unions offer a better value for those of us looking for the average traditional banking services. So today we're going to discuss the reasons credit unions are generally more consumer friendly, and a lot of it has to do with low cost transactional services, whether it's a deposit account or loan accounts. So according to moneycrashers.com and nerdwallet.com, credit unions offer numerous financial services, but unfortunately most of those are the same or nearly the same as those offered by banks. Credit unions are focused on helping consumers keep more money in their wallet, which is a good thing for credit union members. So the average credit union, you really only have to have about $5 in your savings account, right? Your $5 member share and your $5. Well, in banks, they usually require much more stringent services to offer free or no fee checking. Banks usually require you to have a minimum monthly balance around $500. They usually often also require you to do 12 debit card transactions and write 10 checks and those type of things. Credit unions also offer higher deposit rates on deposit accounts, such as savings accounts, CD loans, money markets, and those type of things. Credit union services also allow you to have access to other services that credit unions offer. And many times those services are free, such as bill payer, internet banking, transferring money to friends or families, such as using third-party services such as Pop Money. You also generally get better service at a credit union. Who here has gotten better service at a credit union than at a bank in your personal experience? Every one of us, right? So that kind of tells the story. Not to say some banks don't give good service, because some regional banks are actually recognized as giving excellent service. But according to the NCUA, which is the National Credit Union Administration, and some reporting they do through S&P Global Markets, it tracks rates and terms offered by credit unions and banks on a national basis. So what we're going to do here in the top section of our visual is look at some of those. So your first column is credit unions, the average rates. Second column, your average rates for banks, and these are deposit services and loan services. We're going to focus on two to kind of prove our point today. One of those being the CD rate. At a credit union, the national average is 1.64, and at a bank it's 1.34. On a 5-year auto loan, the average rate is 2.87 at a credit union versus 4.73 at a bank. So obviously a big difference there. And you say, well, you know, those rates are fairly low. You know, what's the big deal? Well, we're going to talk about what the big deal is. So according to Automotive News magazine, in March of this year for the first quarter, consumers spend an average of, or finance an average of $30,621 on a new auto. And the average term is 68 months. So if you take that rate at 2.87, your payment's about $478. Over the life of that loan, you're going to spend about $2,500 in interest. Compare that now to the bank rate at 4.73. Well, your payment's going to be $504 a month. You're going to spend about $4,200 in interest. So that credit union loan saves you $1,700 in interest. Who's up for saving $1,700 on their car loan? Me too. So that's the advantage on the loan side. So we flip over to the CD side. So some of us generally have some type of savings. But to make this comparison, I looked at a $25,000 CD rate at the 1.64 offered by credit unions versus the 1.34 offered by banks. Well, over that 5-year period, your maturity date, at your maturity date for a credit union, you will have earned about $2,135. At the bank rate, you would have earned about $1,700. So again, you earn about 23% more on your CD with the credit union than you do with the bank. So we would all say that's a distinct advantage, right? So now that we've talked about savings and checkings and loans and those type of things, we're going to talk about fees charged by banks and credit unions. And banks charge a lot of fees. As a matter of fact, in a recent New York Post article from September of this year, it was an article called bank fees rise and nobody can stop them. Well, the average consumer annually to a bank pays $667 for their financial services a year. That's a lot. Compare that to a bank of 171. You can see, using a visual, it kind of stands out. There's a big difference between what credit unions do and what banks do. So in 2015 or 2016, the last year we have data, the 3 largest banks in the country generated $5.4 billion just in overdraft and ATM fees. Imagine, that is a staggering number. About $25 for every adult in the United States. It just seems unfathomable to me. But when you look at the average fees, the average bank fee for an ATM transaction is almost $4.60 compared to the average ATM transaction in a credit union of about $1.50. So when the banks have millions and millions of customers, you can see that they're able to generate those high revenues. So there's also data out there that says about 40 million of us as consumers overdraw our checking accounts at some point. So you got 40 million consumers ranging at somewhere between $32 and $40 for an overdraft fee at a bank. You can quickly see how those numbers escalate in the banking world. From a checking account perspective, the average bank charges their member about $183 annually to service their checking account fee. For credit unions, it's about $72. So again, using the visual, you can see the distinct advantage of having your accounts with a credit union. One of the good advantages of a credit union is they're trying to help you keep more money in your wallet, in your account, lower fees, better services, lower transaction fees, lower rates. So now that we've talked about some of the key reasons and benefits that you have in banking with a credit union versus a bank, we're going to talk about we're going to talk about the differences between credit unions and banks. And in articles from WalletHub.com and U.S. News and World Report, they both have very similar stances on the structures of credit unions. So a bank is what? Home for stockholders, right? We talked about the billions in revenue they generate. Well, they're trying to make their stockholders happy. Yes, do they want to make their customers happy? They probably do, but they're more interested in generating that revenue, keeping their shareholders happy, and driving that stock up. So their board of directors is usually very well compensated, right? They're for profit. Anyone can join. More products and services, that's one of the advantages of a bank. They're also more accessible. So Bank of America is going to have a lot more branches than, say, your local credit union. The bad thing about a bank, we talked about it, higher fees, slower service, they're shareholder owned, we talked about that. The good thing is your money's insured in a bank through the FDIC and for up to $250,000. So you compare that to a credit union, and we'll go back, and the structure of a credit union really supports that they are much more member focused. So a credit union is owned by the members, us as the members, right? We own the credit union. We do have a board of governors in most credit unions. They're not compensated, they're totally volunteer. We have fewer products, but we also have lower rates, better service. We have, believe it or not, credit unions as a whole have a greater network of ATMs than banks. Credit unions throughout the country have almost 30,000 ATMs that you have access to as a credit union customer. And again, your money's safe with the credit union. It's insured up to $250,000. So today we've talked about the distinct advantages of why we would bank with a credit union over a traditional bank. We've discussed credit unions have better rates, both from the deposit side and from the loan side. We've also talked about how the credit union works to keep more money in your pocket. When that rate is lower, sometimes you can go a shorter term because we're trying to manage our payments as consumers. So it's clear from what we've covered today why we would bank with a credit union. We'd all agree on that? Good. So if you're seeking the most economical choice for your financial institution, it's really hard to argue why you would not bank with a credit union over a bank. So in the world of customer no service, it's nice to see that credit unions are focused on really trying to take care of their members and help them out financially, both through savings on loan rates, higher deposit rates so they keep more money in their pocket. And again, we all said it at the beginning of this, we just get better service at credit unions. So thank you.